We're putting a lot of faith in Jay Powell and his team at the Fed because this is going to be threading the ultimate economic needle, I feel.
No, absolutely. I mean, I think about all that we've been through in the past 2 years and so much talk about the Fed raising rates. And here we are, we're at our first rate increase. And so, I, like most investors, are really thinking about, what does this mean for portfolios? What does this mean for the economy? And I think one thing that's really important to remember is that the U.S. consumer in particular is operating from a position of strength, right? Which is really going to help them kind of navigate this higher inflationary environment. Consumers in the U.S. are sitting on about $2.5 trillion in cash. We've got low employment. We've got record high wages. And wage growth is also set to by most estimates to outpace inflation later this year. So consumers are really well positioned to absorb higher prices.
But you wonder, Tiffany, for how long? I mean, right now we're still all, and I understand there's a lot of concerns about BA2 and whatever it is, and inflation. It does feel, you've traveled, I've traveled, people are out. I mean, the airports are packed, the stores are packed, hotels are packed, but costs are also packed. They're up. And you just wonder how long that can last, I guess. Yeah,
I mean, listen, we're used to, prices have been slowly and steadily increasing. But again, if consumer spending is 70% of GDP, that's a number that we really have to look at. And we also really have to pay attention to corporate spending as well. So the consumer balance sheet is strong. They're making more money than they've ever made before. They're employed. And so that is really like the best situation to be in an environment of rising prices. And corporations are strong too. Just look at the earnings season that we came off of, strong balance sheets. Like for me, the theme going forward in terms of picking stocks is strong balance sheets and strong business models.
And speaking of threading the needle, I know you like Lululemon and have for some time. Do the Nike results last night, which were pretty strong, do they give you more confidence in Lulu?
So I own both of them, and I think right here you have to own both. So they do two different things. At first glance, they seem like they're very similar, but Nike definitely outperformed yesterday when they released their earnings. But what I was really paying attention to also was margins. In an environment of lots of headwinds, inflation, supply chain issues, higher labor costs, Nike was able to increase their margins just by a little bit, and they did that by not discounting and charging full price. But what's really interesting to me about Nike is that going forward, they're really going to be focused on their main revenue sources, right? So number one, more direct selling. So not really using like the Foot Lockers of the world as much. Investing in their website, flagship stores, and really going into the metaverse. But that's a page out of the Lululemon playbook in terms of that direct selling. So I like both right here, especially at these discount prices.